Hey guys, what's going on? Jamel here, also known as the investor. And if you're actually taking some time to look at this video, it means you're taking the very first steps in terms of really knowing and understanding how to really utilize investing as a means of really accomplishing your goals. Whether it be clearing your debt, whether it be building wealth, you name it, this video is going to serve you in a multitude of ways. Now, if you're anything like how I used to be about a couple of years ago, where you understand the power when it comes to investing, but there's just so much information to the point that you don't know where to start. If you're that kind of person, then this video is definitely intended for you. Why? Because we're going to give a very simplified and fundamental way of how to actually understand how investing typically works. What it is that you need to be cognizant and aware of, what kind of mindset that you need to have, but more importantly, how it is that you can actually take it long term. And then lastly, being able to know how to effectively maximize utilizing the markets, investing in general to its fullest capability. So, that being said, let's just get straight into the meat and potatoes of everything we're actually going to take some time to talk about. Very first thing that we're going to break down is what is called investing 101. So, I graduated from college, degree in architecture about 5 years ago. Anybody who's been to university, you always know that the fundamental classes, the basics, things of that nature, it's always the subject and 101 next to it. And in my freshman year as an architecture student, we had architecture 101 that gave the fundamentals, the basics, and the overall history of what architecture was. This is literally no different. Now, when it comes to this, we have a very simplified way of how to actually look and tackle the markets. Again, one of the main reasons why people do not tend to invest in the markets is simply because of the fact that I feel like there's a number of information that you need to know, which granted is the case, but a lot of times it becomes so overwhelming to the point that people don't know where to start. And so the best way of how to really simplify this, we're actually going to take some time to break this down by actually telling a story, and that is actually called the story of the apple. Okay, so we have a problem right now, right? We like apples. Apples cost $5 each and every time that we go out to buy them. We are on our way to utilize our last $5 to buy another apple. What is it that we can do in order for us to have more apples but spend less money? Okay, so before we actually take some time, I've heard this so many times. Sometimes people will say, save your money. People will say, buy the apple and try to flip it. Let's just be very honest. Just give it short and sweet. Just buy the damn apple. Literally just buy the damn apple. And the reason why I say that is because first off, we have to take some time to understand what our problems are. A lot of times everybody wants to take some time to figure out their own solution without actually addressing what the problems typically are. And the problems that we have here is that we need more apples, we need more of this, but we need to spend less of this. Okay. So in the event that we actually have this and we already understand to just buy the damn apple, let's take some time to explain why. Well, first off, what is it that we can do now that we have the apple? We already know that from an apple comes apple seeds. And then, of course, from apple seeds, it can be produced into an apple tree. Now, knowing this, what typically a lot of people tend to do is that whenever we have an apple in some way, shape, or form, again, we'll eat an apple, we'll find the core where there's a whole bunch of seeds. What people typically tend to do is actually throw the seeds away. Okay, this is probably your 85% of people. Okay. 85% of people will probably throw the apple seed away, which means that you're not able to grow into anything, which simply just means that we're back at the two problems that we faced before of the scenario, which is no apples and no money. Okay, so we already know that this situation doesn't really work. It's not effective, and it doesn't really help us in any way, shape, or form. Okay, now you have about probably I'll probably say 10% of people. Okay, once again going back, we have the apple seed, and so from the core of the apple, we plant these apple seeds, and they end up turning into a small apple plant. Okay, so we see and we understand that we're super excited about the results that we've yielded. That the seed or the efforts, watering, growing, allowing sunlight to hit, produces into a couple of apples that now we're super excited about to the point that we eat. And so again, this is super great. We found a way to have more apples, but again, the problem is we still have no money. Okay. And so this is what typically 10% of people typically tend to do. Now, at this point, we have 85, we have 10% of people that have been filled. Now you have your remaining 5%. Okay. Now, with the remaining 5%, once again, we'll typically do, they'll have the seed, they'll end up planting it, watering it, putting the sunlight, they have their own apple plant. And so instead of actually eating the apples from that plant, what it is that they decide to do is actually utilize a handful, probably maybe like one of those apples, to take the seeds from there and actually start planting another plant. And so what ends up happening, if we take some time to fast forward, now the previous apple tree that we had, it is not only grown larger to an enormous apple tree, but also at the same time, we have numerous other apple plants that are developing. Now, what this typically allows us to do now is that number one, we have an abundance in apples that we can actually eat from, but also at the same time now, where the money aspect comes into play, is that now we don't have to spend our money in order for us to buy more apples, because now we become the producer rather than the consumer. So now not only do we save ourselves money, but now we can also sell those apples to people for $5, say for instance, if they ever need it. In short, we have more apples, and then more importantly, we have more money. Okay. So here's the biggest thing that we need to know, in that just being very quick, right? This is what 85% of people typically tend to do. Once again, you will find yourselves having a moment of opportunity where you can invest your money, but typically what people tend to do, because of the fact that it's not really enough, or they feel like that it's not really much to really invest, what it is that they do, they spend their money on things that literally do not appreciate into anything. This is your 85% of people. Okay. And then you also have your 10% of individuals who, again, they may set their money aside, but in certain cases or situations, they just don't continue going. And so they end up getting over the hump of a little bit of steps, but then they find themselves getting burnt out, a little bit frustrated in some way, shape, or form. So they're getting some progress, but just not quite enough. And then there's a 5% of people who have long-term thinking, who reach the pinnacles of their dreams simply because of the fact that they took time to understand that, yes, it's a process, but the more that they continued, the faster and the easier that it got over time, thereby being able to accomplish their goals. So what's the biggest takeaway when it comes to this? First off, whatever amount of money that you have to start, just invest. Remember what it is that we talked about at the beginning of this. Do not think about whether or not you need to get the apple or not. If that's what it is that you have, just buy the damn apple. It's not about how much money that you have, it's about how it is that you decide to use it. Number two, the only reason why you wouldn't reach your destination is simply because of the fact that you either didn't plan for it or you simply did not keep going. Again, going back to the 10%, a lot of times people take time to start investing, but because of the fact that they did not plan and have long-term thinking, they end up getting frustrated and they simply just don't keep going, and they quit and give up. And then, of course, this is probably the most important. Don't trade what you want in life for what it is that you want now. Okay. That's probably the biggest thing, right? Now, moving on forward, now we're actually going to take some time to talk and break down the secrets of investing. What is it that you need to know in order for you to create portfolio income? What is it that you need to know in terms of creating passive income? And of course, that high income skill portion to really scale both. All right. Now, just to really take some time to talk, we have to first off take some time to actually start assessing whatever kind of goals that we need to have long term versus short term. Once again, if you don't plan to get somewhere, you're never going to get anywhere. Okay. If you would never go anywhere that you've never been to without GPS. I say this so many times. And though we understand this when it comes to driving, universally, I feel like a lot of people understand this when it comes to driving. We tend to do this with our finances every single day. Okay. And so when it comes to being able to understand what your goals are looking like long term versus short term, well, you need to first break them down into a process that you can create, and so that way you can achieve them from the smaller steps, and thereby the smaller steps will actually help create the bigger destination. How it is that you can actually do this is you can actually break this down in the form of a pyramid, right? Where at the bottom, this is the most basic level. This is what it is that you actually start at. Learn about investing, create portfolio income, and then passive income. Okay, so portfolio income, of course, is the long-term investing portion, and then of course there's a passive income method where you can actually create through dividends, where you're able to actually start investing and actually just keep doing the same thing that you're doing and creating a second stream of income. Second part after that is, once you actually create the base level or the foundation, now you can learn a high income skill to actually help you scale this, so that way you have if you're an individual who has their 9 to 5s, you can actually have something that can start off as supplementing your income, where you can actually put into, so that way you can actually gain some type of momentum. And once you actually gain that momentum, now you're going to actually start fast tracking your passive income. The consistency is the layer on top of the cake. And then, of course, that's what helps you get to the dream. Okay. So a lot of times people typically tend to think that this takes a lot of time, but if you once again plan for it, it doesn't necessarily have to do that. Now, a part of the Investors Institute program, we have a systemized way of actually how people can typically tend to do this, whether you be a part of the program or not. Again, this is super, super viable for anybody. In 30 days or so, learn about how to invest. Set up a brokerage account, create a passive income system for yourself. Start learning price action mastery so you can actually understand what is happening on a high income skill level when it comes to the markets, but also a long-term investing level as well. Okay, 60 days at this point, you're starting to learn how trading typically works. Implement a 10% rule to start so that way you can actually start to understand how these things typically tend to work rather than just simply just throwing your money away at something. Then afterwards, when you actually start to get the hang of it, probably in your 90 to 120 days portion, now you can actually start to scale aggressively, and then that way utilizing it to fast track your passive income. All right. So there are a number of ways of really how to go about this. Again, one of the basic ways of really investing is investing in company shares. So once again, majority of people typically tend to know this. Say for instance, you have a company like Apple, okay, and you invest in Apple at a specific price. As the company continues to appreciate, so in turn do those shares tend to appreciate in price. And as the price of those shares continue to increase, so does your money in market value. Okay. Again, a lot of people typically tend to know this, but majority of people do not maximize this in the way, shape, or form that it ought to be. This is what has been able to amass Warren Buffett's major 105 billion plus dollar wealth, and that's in the form of dividends. So again, there are a number of companies that are called dividend paying companies that will literally pay you to own companies. I mean, own shares of their companies. Okay. Part of my portfolio, I do not own any stock in my portfolio that does not pay me dividends. It just personally just does not make sense to me. All right. And then, of course, there's the high income scale portion of the markets, which is options trading, which is buying and selling. Okay. So, again, when it comes to really breaking this down, again, we're actually going to take some time to break down how to think about investing. Again, one of the biggest deterrents of part of investing is literally how to think about it. Okay. Simplified way, and maybe you were one of these individuals. I know that I was when I personally was in school, but I had a professor of mine that told me, "Oh, Jamil, invest in things that you utilize." Now, as a college student, I loved Air Jordans. I was a sneakerhead. I still am. And I love Starbucks, and I went grocery shopping at friggin' Target. Okay. So you have Nike, you have Starbucks, and you have Target. Context, majority of what it is that I basically just stated in terms of Nike, well, really Starbucks and Target, they're staple companies. They're recession proof, and then you have your Nikes, which is a solid standing company. Now, not to say that any of these are bad, right? But take it a step further in terms of really understanding, right? Think about all the things that are necessities that society uses and they cannot live without. Why should you think about it from this perspective? Because they will always make you the most money. Okay. If I can give an example for a second, we have Clorox, we have Colgate, and we have Next Era Energy. These are all stock companies, these are all companies that are on the New York Stock Exchange. Okay. We have laundry detergent, we have toothpaste, and we have electricity. Okay. What do all three of these stocks typically have in common? They are simple and they are recession proof. Why are they recession proof? Because they are industries that are essential to the economy, regardless of whatever state that the economy is in. If I can give an example, when it comes to Colgate, okay, you're anything like me, I have very, very big I'm not gonna say standards. Standards is not the right word. I am very finicky when it comes to toothpaste, right? I have my specifics when it comes to toothpaste. I do not like fluoride toothpaste. I have a couple of friends of mine that prefer fluoride toothpaste and don't mind it. Okay, but regardless of how either you, myself, or anybody else in the world thinks about toothpaste, guess what? There are millions of people on the earth that have to brush their teeth every single day. I promise you, Colgate, your Crest thing, all these fluoride toothpaste, they're not going out of business. I promise you they're not. So if you know that everybody in the world has to brush their teeth, what makes you think that your money's ever going to stop coming in, provided that you invest in any of these? Okay. Same thing when it comes to laundry detergent. There are a handful of people who actually do not like laundry detergent because they see certain effects. But once again, laundry detergent, everybody has to clean their clothes. Everybody has to clean their clothes of every day, every week, every month, every year. I promise you, Clorox is never going to go out of business, regardless of where it is that we are at in the economy. Okay. And then, of course, you have your next era energies. Okay. Once again, you're probably looking on your laptop. You're probably looking on your cell phone. You're probably doing something electronic related. I'm on my laptop right now speaking on this video right now about this specific stock. Once again, electricity, which is a commodity, is recession proof. It's not going anywhere. So whatever makes you think that your money is ever going to stop coming in. You see, the simplest businesses, and this actually came from Warren Buffett, the simplest businesses make you the most money. Not to say that you don't have your growth stocks here and there, your blue chips, things of that nature, but if you ever want long-term standing wealth, then think about the simplest businesses, because the simplest businesses do well in all conditions of the markets in general. Okay. And then, of course, when it comes to making investments long term, the simplest way of really thinking about this, and this is a continuation of this, is to really think about index funds, ETFs that will help build your portfolio. So if you're brand new when it comes to ETFs, these are what are called exchange traded funds. Okay. These are your QQQs. For anybody who is unaware, this is the tech sector. You have your SPYs, the S&P 500. You have your VOOs, or your Vanguard S&P 500s. And just to give everybody a very, very great breakdown, a simplified breakdown, the S&P 500 has yielded 11.88% return on investment since 1957. Okay. So what that simply just means is this vehicle having a long-term mindset. This vehicle has worked since 1957. All that simply just means is you simply just need to remain consistent in investing. So what this simply just means is ever since then, and just to give everybody a heads up, 1957, I do believe we had the crash in 1972, then crash in 1987, 2000, 2008, and then of course COVID-19. We had flash crashes in 2018, things of that nature. Guess what? The S&P 500 has still been able to outperform and yield returns of close to 12%. Now, take some time in 2024 to factor in inflation. You're probably let's lowball and say we're probably looking at probably about, I'll probably say 6-7%. But once again, 6-7% year over year on return on investment is a lot better than zero. Okay. Now, if you're anything like me, I prefer recession-proof stocks, dividend-paying stocks. Once again, going back to the whole concept of personally investing in companies that literally pay you to own companies or their shares. You have your FedExes, you have your Waste Managements. Once again, why is Waste Management a recession-proof stock? Because regardless of how our climate activists, friends, things of that nature think about the earth, there's going to be trash on this earth till the day that we transition. It would be a great idea for you to invest in the one business that is never going anywhere until the test of time, until we find a new way of how to get rid of trash on the earth. Okay. And then also at the same time, you have your Apples and you also have your American Expresses. Okay. So once again, these are the things that you really want to take some time to consider and really, really think about when it comes to being able to know how it is, and really think about what it is that you need to know in terms of really investing, not only for now, but also primarily long term and in the future. So I hope this video definitely helps. Again, in the next couple of videos, you're going to learn how to actually build your portfolio, and then also being able to build a passive income system for yourself. So hope this video helps. Stay tuned for the next one.